Wall Street took a big hit on the first day of trading in September, which is historically one of the worst months for the market. The Dow, the S&P 500, and NASDAQ all took their biggest losses since a global sell-off earlier last month. CBS News business analyst Jill Schlesinger is here to break it all down, so let's jump right into it. What was going on yesterday? Why the tumble?
You know, I think there were a couple of things. Number one, we had weaker than expected manufacturing data. Number two, we had a report out from Goldman Sachs that said, hey, demand from China is slowing down. Number three, this is what I think. I think a lot of people said, hey, I've been away for a long weekend. They looked at their positions. They said, the NASDAQ's up 20% this year. The S&P's up 19% this year. Maybe I should take some money off the table. Regardless, this is an overall fear of, hey, maybe things won't continue. Maybe we'll be slowing down too much. Maybe we're looking at a recession.
But isn't a slowdown with the Federal Reserve what people wanted?
Yeah, this is the weird part. This is the paradox of where we are. We want the Fed to slow things down because we don't want inflation to bubble up again.
Right.
And inflation's moving in the right direction. But the real issue is that if we slow down too much, the fear is we see layoffs, we see that there could be actual contraction. And you know, it's interesting. The Fed meets exactly 2 weeks from today. Exactly 2 weeks, September 18th. We are expecting a 1/4 percentage point rate cut. It would be the first of many. But that's the focus right now, is the Fed and the labor market.
Now, a new jobs report will be released Friday. What can we expect?
So I think we're looking at maybe about 170,000 jobs were created. It could be up, it could be down. Last month was a weaker than expected report. That started the big sell-off in early August.
Yep.
But regardless, we really are looking at the unemployment rate, which is at 4.3%. We're also looking at wages. We need to see that our wages are growing faster than the inflation rate. So far, for the last few months, that's held.
Should people do anything with their retirement accounts, anticipating the Fed move?
Remember last month when everyone was freaking out and I said, calm down?
Yeah.
It's a day-to-day thing. You're a long-term investor. Please don't do anything. And even when you see a sell-off like yesterday, it's going to be a volatile season. Please be clear that if you are a long-term investor, this is the price of admission. You must endure these bad days. Over the long term, you're going to be happy that you did not mess around with that portfolio. Mom, I'm talking to you because she called me yesterday and she was nervous. And I said, please, I know you're nervous, but there's no need to do anything.
In football terms, you can't win the season in week one. Play the long game.
Oh, yes, baby.
I got you. Dollar Jill, we appreciate you.